Welcome to this breakdown. All right, here's the deal. Today we're unpacking something that is, honestly, enormous. It's barely being discussed, and even more importantly, it's attached to a very unforgiving deadline that is already counting down. The subject is this: the Internal Revenue Service owes real money to tens of millions of people in the United States. And I want to be crystal clear from the start. This is not a hypothetical argument about tax policy, and it is not some vague credit you might maybe qualify for someday. We're talking about actual dollars, cash refunds tied to penalties and interest the IRS assessed, collected, and pulled straight from the bank accounts of ordinary taxpayers and small businesses during the pandemic era, while life and commerce were shutting down. And here's the part that's truly unbelievable. The IRS was never going to broadcast this. They were content to keep it buried. They only got exposed because a federal court forced the issue. To put it bluntly, this is money that already left your hands. It is not a future benefit, and it is not a new credit that depends on what Congress does next. These are dollars the IRS took because its system said late, even though the disaster rules said paused. For families and for small operators who were trying to survive shutdowns, those penalty bills were not minor. They were real hits to checking accounts, payroll accounts, and emergency savings. And the reason this matters right now is the deadline. The law gives you a limited window to demand the refund, and once that window closes, the refund rights expire even if you were right the whole time. That is why this is flying under the radar and why we're moving quickly today. So stay focused and follow along closely. So in this explainer, we're going to cover in plain language how we got here, what the courts have said so far, and most importantly, the very specific steps you need to take immediately to claim the money you are legally entitled to before the deadline closes. You'll want to pay close attention, because if you zone out for a moment, you could miss a refund that is genuinely significant. Let me begin with a quick qualifying question. Did you or your business pay IRS penalties or interest at any point from January 2020 through July 2023? Think back to that exact 3.5-year span. It was chaos for everyone. Maybe your return went in late because everything was upside down. Maybe you couldn't pay a balance on time because your income dropped fast. Whatever your story is, the bottom line is this: the IRS now owes tens of millions of taxpayers money from penalties it aggressively charged during that exact window. Sit with that for a second. The government collected penalty dollars during one of the most stressful economic periods in recent memory. And as you'll see in a minute, a major legal ruling has made clear that many of those penalties should never have been charged at all. If you or your company fits anywhere inside that timeline, stay with me, because this explainer is built for you. And when I say penalties and interest, I mean every category the IRS can tack on: late filing, late payment, estimated tax, information return penalties, payroll deposits, you name it. If you paid it, or if it was taken out of a refund you expected, it still counts. Many people never even notice the charge because it was netted against a later refund or rolled into an installment plan. Others paid immediately just to stop the letters. Either way, the money came from you. The only question now is whether you will submit the claim before the hard deadline so you can get it back if the courts hold firm. All right, let's get into it. Section 1, COVID penalties and what the law actually says. Specifically, we need IRC Section 7508A. To understand why any of this is happening, you have to look at the code section I just mentioned, Internal Revenue Code 7508A. When COVID hit, the federal government didn't just issue public health guidance. It made a formal legal move. It declared a national disaster. And that declaration is the hinge that everything swings on. The statute says that once a federal disaster is declared, certain filing and payment deadlines don't merely get pushed back. They are legally suspended. They are stopped for the full duration of the declared disaster plus an extra 60-day at the end. Now let's map the real timeline. The National Disaster Declaration began on January 20th, 2020, and it did not officially terminate until May 11th, 2023. That's 3.5 years. Here's the math. Take the end date, May 11th, 2023, and add the automatic 60-day extension. You land on July 10th, 2023. That date matters because it proves a simple, monumental point. Under the plain text of the law, nothing was legally late until after July 10th, 2023. But there is also a hard deadline for getting your money back in this specific situation, and that deadline is July 10th, 2026. The clock is real. Understanding these dates is the master key to recovering funds that should not have been taken. That's why the dates matter more than opinions. If the disaster period legally froze the clock, then penalties tied to lateness inside that freeze are on shaky ground. And because the refund statute has its own limit, you cannot wait for perfect clarity or for headlines to catch up. July 10th, 2026 is not a suggestion. It is the last day to preserve your rights for this specific issue alone. So even though that legal timeline is straightforward, here is what the IRS did anyway. Throughout that entire 3.5-year disaster period, it kept assessing penalties. Seriously. It kept running interest. It kept mailing those scary automated CP notices that make your chest tighten. It slapped struggling small businesses with failure to pay penalties right when they were most fragile. It hit individuals with estimated tax penalties while people were sitting at their kitchen tables wondering whether their job, their customers, or their whole industry would exist 6 months later. It even imposed huge penalties on international information returns, penalties that can reach tens of thousands of dollars even when no tax is due. Month after month for 3.5 years, the agency behaved as if the federal disaster declaration meant nothing. So whether you are a person, a mom-and-pop shop, a corporation, an estate, or a trust, whether the issue involved income tax, employment tax, or excise tax, if you were charged any of these penalties during that window, you were billed for something that the strict letter of the law says you did not owe. And that is exactly why a big court fight was inevitable. Remember, the statute doesn't care whether you were trying to be perfect or just trying to stay afloat. It applies across the board during a declared disaster. That's why this hits so many filers, from W-2 workers to employers with payroll deposits. When the IRS kept charging anyway, the conflict wasn't theoretical. It was guaranteed to end up in court. Now we go to Section 2, the Kuang Court decision, a November 2025 federal ruling that cracked this open. The U.S. Court of Federal Claims reviewed the situation and issued a blunt, no excuses ruling. This was not some quiet back-office disagreement between agencies. This was a federal court stepping in, dropping the gavel, and saying the IRS got it wrong. The court explained that the obvious meaning of the statute is that the automatic extension runs from the start of the disaster declaration through the end of that declared period and continues until 60 days after it ends. Put as simply as possible, the court said the IRS cannot punish you for being late during a period when legally you are not late. That is common sense, and it was also a direct rebuke of how the agency handled the pandemic period. A federal judge looked at the dates, looked at the words in the tax code, and said, in effect, the taxpayers are right and the IRS is wrong. If you were assessed a penalty during that time, this ruling amounts to the court saying the IRS took your money unlawfully, and that's why this decision matters for refunds, not just for theory. The judge didn't create a new rule. The judge applied the rule the way it is written. If you paid, the door to recovery is open. If you act. So you might be thinking, if this is that big, why haven't I heard anything about it on the news? That takes us to Section 3, the well-advised versus the unaware, and why the IRS is staying silent. To understand how widespread this quiet problem is, look at what the National Taxpayer Advocate has said. If you're unfamiliar, that office is an independent watchdog within the IRS structure, created specifically to call out unfair treatment of taxpayers. In a recent report, the advocate stated, quote, "Tens of millions of taxpayers may be entitled to refunds or abatements." Tens of millions. The government's own internal watchdog is sounding the alarm as loudly as it can. But here's the catch. The IRS strongly disagrees with the Kuang ruling. The agency doesn't enjoy losing in court, so the Department of Justice is expected to appeal and use basic human nature here. If a huge federal agency is actively fighting a decision on appeal, it is not going to spend its own money sending millions of letters that say, "By the way, a judge just ruled we might owe you cash, and here's how to claim it." That is not happening. They will keep quiet, stall, and hope most people never learn they need to file. What is especially important is how the National Taxpayer Advocate described the consequences of that silence. The report said that without swift action, this will create dramatically different outcomes for two groups, the well-advised and the unaware. On one side, the well-advised are already being alerted by experienced accountants and tax attorneys. Those professionals have flagged the issue and are filing claims right now to preserve their clients' rights before the deadline runs out. On the other side are the unaware, millions of everyday taxpayers who will simply let July 10th pass without doing anything. And once that date passes, their legal right to the refund is gone, permanently and irreversibly. Not because a judge ruled against them, but because no one told them to file the paperwork in time. Which category you end up in depends entirely on whether you act on what you're hearing here immediately. So let's fix that in Section 4, How to Claim Your Refund. Grab a pen because this is the action plan. The process begins with something called a protective claim. I know that sounds like scary legal language, but it actually simplifies your life. Because DOJ is appealing the Kuang decision, this could stay in court for months, possibly years. You might assume you have to wait for the appeal to finish, or you might think you have to calculate the exact dollar amount the IRS owes you before filing anything. You don't. That's the point. A protective claim is just a formal notice to the IRS that says, "I'm preserving my right to this refund while the courts sort out the appeal." It's a placeholder that locks you into line. Once it's filed, the IRS has to hold your claim in suspense until the Kuang case is finally resolved. You do not need a precise amount. You only need to secure your place before the deadline hits. Think of it as saving your place while the appeal plays out. You're telling the IRS in writing that your claim cannot expire while they argue. It can also protect you if you later spot another penalty on a notice you overlooked. The point is file first, then sort the exact details later if needed. That's how you stay protected. Here is how you actually file that protective claim, and you need to follow this carefully. You cannot do this casually, and you cannot handle it by clicking a quick online button. Step 1. Go to IRS.gov and download the paper version of Form 843, called Claim for Refund and Request for Abatement. Yes, it is 2026, and yes, the IRS still requires this to be on paper. You print it and fill it out in ink. Step 2. At the top of the form, clearly write these exact words: Protective Refund Claim pursuant to Kuang Pace. That exact phrase is the flag that helps it get routed correctly in their system. Step 3, and this part is non-negotiable. Mail the form by certified mail and request a return receipt. At the post office, you will get a small green card that comes back to you later with a signature. Do not lose that card. Do not toss it. Put it in a safe if you have to. If the IRS later claims it never received your paperwork, which does happen, that green receipt is the only proof you have that you filed on time. It is your shield. Now let's turn everything into a simple checklist you can start the moment this video ends. First, Dig through your folders, your filing cabinets, your shoe boxes, and your digital records, and pull any IRS notice you received between January 2020 and July 2023. You're looking for anything that shows a penalty, an interest charge, a CP notice, or a balance due letter. Second, write down the tax year listed on each notice because you'll need a separate Form 843 for each year in that COVID window where a penalty was assessed. Third, if you work with an accountant or tax preparer, contact them this week. Don't delay. Say the words Kuang decision and ask whether it applies to your situation. Any tax professional who is paying attention will know what you mean. And finally, if you don't have a tax pro, don't panic. Go to taxpayeradvocate.irs.gov. The Taxpayer Advocate Service is independent from the IRS collection function, and they provide free help for exactly these situations where ordinary taxpayers risk losing their own money simply because the bureaucracy is too hard to navigate. Before we end, I want to frame one last number for you: 0. That's the downside risk of taking the time to file a protective claim. Think about the logic. If you file and the courts later decide the IRS was right and the Kuang decision gets overturned on appeal, you lose nothing. Your claim will be denied, and you move on with your life. But if the Kuang ruling stands, if the judge's decision is upheld, you will receive a real refund check for penalties and interest you never should have paid. The downside of filing is mathematically 0. The downside of doing nothing, clicking away, and ignoring this is that you permanently surrender money that is yours. Money the government took when it had no legal right to take it. Which brings us to the final crucial question. Will you take the steps needed to file your protective claim before the July 10th, 2026 deadline, or will you let it slip past? You're not in the unaware category anymore. You have the dates. You understand the Kuang Court ruling. You have the step-by-step process for filing Form 843 by certified mail. Don't be the person who watches all of this, decides it's a little too much paperwork, and leaves thousands of dollars on the table for the government to keep. The clock is counting down. The refund is legally yours to claim. The next move is yours. Act today, protect your rights, and go get your refund. Thanks for watching.